And I think that's one of the biggest debates for Sing equities in 2026. It has done so well in the last 2 years. STI is nearing all-time high.
Correct.
Valuations are above mean at this point in time. Is there any more juice left in the market?
All right, good morning, everyone. Welcome to episode 3, season 3 of Unscripted in conversation with Eastspring Investments. We're going to bring it indoors today, and I'm super excited to have with us Daniel Lau, one of our ASEAN equity PMs. Great to have you on the show, Daniel.
Good morning, Salman.
Thank you for being here. Let me first kick off with what's most topical, and that's what's happening in the Gulf. How do you see the Gulf issue impacting ASEAN equities broadly and even Singapore equities?
Yeah, so I think what's happening in the Middle East right now, it's one of the worst things that could happen to Southeast Asia, right? I think the impact on the energy complex is going to drive high fuel prices, and given that most of ASEAN economies most of us are actually net energy importers,
Yes.
with the exception of Malaysia.
Right.
So that's going to drive transport inflation, food inflation, in fact. So inflation is going to go up. And that's going to cause moderation in GDP growth across multiple ASEAN economies. That's also going to drive some weakening in the currencies against the US dollars.
Right.
So I think amidst this chaos, we try to stick to the fundamentals. We try to find countries that we think could withstand the volatility. So countries that still have some structural growth,
Right.
some reform initiative. So Singapore, Malaysia and Vietnam are the 3 countries that we're actually very keen on.
Oh, that's interesting. Okay, well, let's bring it home a little bit. Let's talk a bit about Singapore. So STI, 2 years back-to-back, 20% plus gains, outperforming NASDAQ, S&P 500. Great story, yet not the AI trade as you see Korea, Taiwan, etc. Why don't you break that down for us and our investors as well a little bit about how do you see the market and how do you think about that AI trade versus the STI or alongside the STI? You know better.
So actually, in the minds of a lot of investors, I think Singapore is, for say, boring. Right? It's a dividend market.
Right.
Like I said, there's no AI trade.
Yeah.
Actually, that's not true. For Singapore, actually, I think BCG did a study 2 years ago, in 2024, and they highlighted, Singapore as one of the top 5 economies that's an AI pioneer. And as an AI pioneer, it's actually supported by a host of data centers.
Right.
We've got a lot of data centers in Singapore, and that capacity continues to grow. A lot of that is driven by investments from hyperscalers. To support this growth in the AI ecosystem, Singapore does provide the infrastructure.
Right.
And we also have a slew of companies that's supporting this AI infrastructure in Singapore and also globally. So there are companies that does electrification for data centers. A lot of that work is done for hyperscalers.
Sure.
There are companies that does testing services for semiconductor manufacturers,
or
even making the equipment for these semiconductor manufacturers. But we do have companies that are kind of plugged into the AI ecosystem.
Of course.
And if you compare the kind of rally that we have seen in Singapore versus a lot of these North Asian markets like Korea, Taiwan, that's really driven by just a handful of names, right?
Yes.
Korea and Taiwan.
Yes.
It's very concentrated.
Yes.
Singapore gives you a more broad-based rally.
Okay.
We've got the rally over the last 2 years is really driven by a few sectors, broad sectors. It's not just a few companies.
Right.
So on a risk perspective, it gives you that kind of diversified return as well.
Okay.
So the risk-adjusted return looks pretty good.
Okay.
And lastly, if you look at Singapore, our currency has also appreciated against the US dollars over the last 5 years.
Right.
You compare that to Korean won, it's just one way down.
Yes.
So on a currency-adjusted perspective, Singapore also gives you that kind of pretty good risk-reward compared to a lot of these North Asian counterparts.
Well, that's great. We'll huddle here. But look, great points you've made, Daniel. You talked about the rally, and I'm sure folks are wondering how much more does the STI have in terms of juice and rally going forward. How are you as a PM thinking about valuations, earnings in Singapore in view of full year 2025 results and going forward?
Yeah, in fact, Salman, that's a great question. And I think that's one of the biggest debates for Sing equities in 2026. It has done so well in the last 2 years. STI is nearing all-time high.
Correct.
Valuations are above mean at this point in time. Is there any more juice left in the market?
Correct.
I would say yes.
Okay.
if you look at, firstly on valuations,
Right.
I don't think it's justified to look at historical valuations at this point in time, right?
Right.
Because I think for the longest time, Sing equity has been sort of overlooked by a lot of regional and retail investors for many years, and we are not paying up for the kind of earnings quality, the kind of earnings growth and visibility that Sing companies provide.
Right.
And I would say they're actually undervalued over the last few years. So right now it's really a value recovery, value discovery for Sing equity. So that's what's driving the re-rating. And secondly, when you think about Singapore, it's ultimately still a yield market. Right?
Yeah.
There's a lot of REITs in Singapore. The banks are giving you pretty nice yield. Singapore as a market, compared to a lot of these other Asian equity markets, we're easily top 3 in terms of dividend yield.
Yes.
Now you slap on, the spread over risk-free rate.
Right.
We're actually the top market that gives you the spread, largest spread over the risk-free rate. So equity investors, they are seeking income. They're actually adequately compensated for the risk that they're taking. And lastly, I think, we just look forward from 2025 just ended. 2026 and 2027, we do see quite meaningful earnings growth acceleration for Sing market.
Okay.
I think that's going to be quite constructive for valuations as well. And lastly, when we think about the equity market development program.
Yes, EQDP. Are you excited about it?
Yeah, we're very excited. It's just in the early innings. I think that's going to drive, a lot more interest, a lot more capital flows into Singapore. And I think the risk reward right now, it looks very favorable for equity.
Tell us a little bit about your edge, you and your team's edge in terms of Singapore or wider ASEAN.
So in Singapore, Brian and I have been looking at the market for most of our careers.
Love it.
For a lot of the company management, we are actually pretty close to as well.
Absolutely.
So it allows us to channel check a lot easier, a lot better. At the same time, I think on the process perspective, we do keep things simple. We believe that we don't have to reinvent the wheel.
Right.
Actually, a lot of things is just doing the basic things right.
Absolutely.
And that's what we aim to do, and that's what we try to do.
Right.
So for us, valuation is our North Star.
Yes.
We do create, we do look at numbers very closely.
Of course.
And it's just really focusing on valuations. If it hits our valuation target, we might review the position. Things like that in risk management that comes into play as well. So I think that's our secret sauce, right?
Love it.
Close to management, stick to basics.
Yes.
And risk management.
No, I love that. And I loved your channel check point as well. Look, we're incredibly proud of both you and Brian. Great to have you guys on the team with us at Eastspring. Daniel, thank you very much for joining us this morning on Unscripted. Great to have you with us. Love the passion.
Me,
hey, pleasure, man. Absolutely.
Thank you.
Good to see you. Take care.